Hey, welcome everybody. Welcome back to Trader's Retreat. Today we're going to go over Active Trader and basically how I have this set up. So I'm not going to go into too much of Active Trader. There are plenty of videos to let you know how to set it up, right? A couple things real quick. Once you get into Active Trader, a lot of times you just see the window here, right? You can have multiple buy and sell. I don't know what you call these, the chains, I guess, order books. Yeah, it's not the order book. Anyways, on the side here, right, we have chart. If you click on that, each window, because you can have multiples of these. I'm not going to do that because you won't be able to see the chart very well. But you click on chart, you activate Active Trader, and then you'll have a setup that looks just like this. A lot of times it looks like this, right? So if you want to use Active Trader the way we do, you got to click on this, come down, and make sure you have auto send activated, right? Make sure you have that checked off. Now, be careful. That means as soon as you click in this green, you're going to buy at whatever price it's at. You click in the red, it's going to try to sell. So if you have a position, it'll sell it. Most people can't just sell naked contracts, but I mean, you can sell naked puts, right? As long as they're cash covered. So just be really careful what you're doing once you activate Active Trader. You can also sit here and say, okay, 5, 10, 20. I don't buy. A lot of times it's set at 100. You can actually go into your main settings, and I like to keep it at 1. Just that way I'm not like a lot of times as I scale out, I scale out of maybe 3, 5, whatever, right? So I want to have the control over that. So I just keep it at 1. And then if I want to buy, 10 or 20 contracts, it's right there. Easy to do. All right. Okay. So that's enough about the Active Trader. Like I say, there's plenty online. You guys can check it out. I'm just going to get rid of that pink line. I don't use that. I looked into settings and I can't seem to get that to not show up every time I open up, which is great. It's lovely, right? All right. So we're looking. What I want to show you today is how I chart or I use the supply and demand levels on the actual contracts chart, and it's really cool. So I like going to the 5-minute. You can do this on any time frame. For me, the 5-minute makes sense because a lot of times, even if I swing them, I'm only holding them for a day or two. I want to see these little levels. So what I'm looking for are areas like this over here, kind of where price makes a big move out of it. Also, I like to see, that to me that would say supply. Obviously it's a supply area. And then where price moves down into and we catch a bounce, those are going to be our demand zones. And I'm going to show you how to get those. So we're going to have to zoom in a little bit. That's fine. So let's do this first. Yeah, let's do this. All right, just so you guys can see. All right, so we're going to start here. Now with supply zones, right? We are looking for a bullish candle. And what I care about I care about the body of the candles, whether it's supply or demand. I'm looking for the opening, the open price and the close price, right? Not the wicks. That's a big difference here. So the opening price is going to be your supply level, okay, on a bullish candle. The opening price of a bearish candle, okay, on the downside, the opening price, which is going to now be the top, not the bottom, is your demand level. Okay, so supply and demand, right, are always going to be at the open price of the candle, of their respective candle. So let's pop a line on here and get moving so this video doesn't drag on. All right, so that is the first supply level, right, 24.33. Now I don't just do this. I want the whole zone, right? So what makes up this zone at the closing price, right, of that same candle, this is going to be the resistance, okay? Sorry, I'm all over the place. So this top line is the resistance of the supply zone, okay? So I know that's probably confusing when you're hearing it on the spaces on Twitter. For anybody that isn't, that maybe, especially if you're new, I'm sure it's confusing. So I'm hoping these videos will help clear it up. This is the same thing I do when I'm doing it on the underlying assets, right? These are the yellow, gray, blue lines that you see, and pink ones. Normally the 5-minute, when I'm actually putting it on a chart, the 5 minutes are going to be pink. The blue lines are going to be the 1 hour, and then the yellow lines are the 4-hour, and then the gray lines are the daily levels. Okay. I also have white zones, right? White lines that make up zones on my chart. Those are different than these, and I made the last video that I made that came out last week. That is a starter video, basically. There's a lot more we can go into, but that gives you an idea of where those zones come from. So these are two different things. These are the supply and demand levels, and that's what we're working on. So again, we made our supply zone here, and what we're expecting is price to come up and possibly touch it, right? Now I can tell you it doesn't here, but this is such a perfect example where I want to make sure we put it in. All right, so as we move along, right, and this is something I would do like the night before. If you're saying, hey, I want to get a couple, like I want to get a put, contract and a call contract for Tesla, because I think Tesla's going to move today. We have CPI, whatever, right? It's Friday. There's going to be news. You want to do this when you have a little bit of time. Now, as you get better at it, you can do it in real time. I don't always do this with the contracts, especially if I'm just going to be in and out, because I'm just paying, all my focus goes to the charts and to the underlying charts along with the indexes, and it's just not necessary. Now, if I have a little bit of time, or I'm buying an expiration that's out maybe 5-10 days, right? Or, whatever, weeklies, or the week after, or whatever. I'm buying a monthly, I will do that. And at that point, I will do the 15-minute and maybe the hourly levels as well, but always the 5-minute when I'm charting out the actual individual contracts. So there's my little spiel on that. Okay, so as we come down, right, we come down here, we hit, this could be a demand zone. I mean, it is technically, but I'm not as worried about it here. What I do like here, though, see how we popped up? And I say that because I know price kept going down, right? So I'm not really looking at this as a demand zone. What I'm looking for is maybe a supply zone here, and that's that bullish candle. So let's snap a couple lines on that. I'm finally getting the hang of this with TOS. I'm so used to charting on TradingView that this is it's a little ridiculous. All right, so we have price coming down, right? What I'm looking for are like areas like this, right? See how we have this bullish candle here? And let's just keep going so it gets a little bigger. You can see how it kind of stands out, right? We found some support, some demand here. We popped up, right? And obviously we continued down. So this stands out to me, right? It's kind of the dominant, bullish candle. So knowing that price is continuing down, let's just say you could only see, that's going to make the candle too small, but let's just imagine, right, that you didn't have this data here. We know that price was coming down. So what I'm looking for is supply zone. So I'm going to mark this as well. And you'll see how, you can already start to see how the interaction with it is. Okay, so there's that level, right? Now, this is a great example. Let's say you're watching this contract, right? This is a put. So you're trying to buy the puts, right? So you see we come down, we kind of make this base here. And you say, hey, we push up, maybe Tesla's going to drop some. The chart looks good. You get this pullback here, right? And we literally come down and basically test the demand here, this demand level. And we'll get to that in a second. But, this would be a good spot to buy, right? Let's say it pushes up and you don't take profit here, comes back down, but okay, we didn't get under your stop, right? Or you didn't go into the negative. That's great, right? You already have this zone up here, right? And where did we go? We went right to it. So, you could get, a $10 contract up to $15. It's a 50% move right there. Pretty easy peasy. And so let's do the demand zone down here. So looking at this, right, we do have this bearish candle. So when we're looking for a demand zone, we're looking for a bearish candle. And the demand level is the opening price, and the support level is the closing price. But what I really want is I want this one, because it's the lowest. The body of that candle is what's price hasn't gone through it yet. And as these become invalidated, I'll just delete them and get rid of them, right? So we have this level here, but yeah, so this to me, like I probably would have bought here and here again, right? And it's an easy stop. You stop out right down here. So let's say you stop out at, at 9:35, right? You got in at what is this? 10:15 or 10.1. Let's say you set it for 10:20, you get out at 9:20 even, right? It's $1. It's $1 loss on a $10 contract. It's 10%. That's pretty good for options contracts. That to me, that's good risk to reward, right? Because I know I'm coming up at least to this level, in my opinion. But this is the supply, so this is what I trust. And what did we do? Boom, we came up and touched it, right? 50% move, nice trade. All right, so we have this demand zone. So now that prices come up, right, and we're thinking, okay, it's starting to come down. I want to look for more demand zones, right? So I see this bearish candle, right? That's a nice dip. So let's chart that out. Okay. And then looking down here, no, nothing really looks great. I mean, you could maybe pop something here, but because it wants to come down and touch, it really was testing this demand zone. I wouldn't do that. I don't really care about that. So we've charted this out. Price, is pushed up. We're like, okay, here's a demand zone. Let's see what happens, right? You've taken profits. And what does it do? It comes down. It tries to test it from the top. It does test it here. We immediately get a pop out of it. And, and that's a great trade. If you bought those and swung them, right, and sold it right at open, you had a hell of a trade. So anyways, meanwhile, this tested our supply. It makes sense. We open up, we see the chop. There's always volatility at open, especially with Tesla. But we don't see a bearish, we don't see a bullish close above this supply zone. So to me, this is all bearish. This still looks bearish, and I mean, you can't, I'm not shorting puts. You could sell it here, but I would say, okay, look, it's going to go down, right? You do get a bounce here, okay? And it makes sense because this was demand, it held. We do get a bounce. If I tried to buy here, I would have gotten stopped out, right? I probably wouldn't buy here just because it's in the middle of the day. You could see probably Tesla was pushing up. That means the puts are going down. So I'm looking more for down here. And you can see we finally hit it. And what a trade here. 10 minutes. Boom. Right up. Whatever that is. $9, $10 to, so basically a $3 trade, right? $3 contract profit off of a $9. So that's like a 30% move right there. Ba-boom. All right. In 10 minutes. So here we see it again, right? We test it here, fall off. These zones work, right? It's something you want to keep in mind. Take your time to practice this, put these on the chart. So let's just zoom out and see if we can find anything else just for the future here. But yeah, take your time, learn how to do these, and I mean you'll love it. In my opinion, you'll love it. If you're not sure what you're doing, definitely leave questions. Get into the Twitter Spaces with us. Ask questions. You can DM me. Yeah, I mean whatever. We're happy to help. Anybody figure this shit out because it is. It's not necessarily easy, but it's pretty simple. And once you get in the hang of it, build a habit of doing this and managing your risk correctly, you're going to be profitable. I mean, unless you just don't have the perseverance and the discipline, you should be profitable. So anyways, guys, this is the demand zone I see here. Obviously I would chart this and I would probably keep it, mainly because, price came down and you see how we got under it. And we tried testing it from the bottom, couldn't get inside of it very well, and we see another drop to the downside. So for me, like that's confirming this zone. This zone is still here. This is still a demand zone. Price just fell, underneath it. Now once we get back, we try to get back up into it, come back down, right? We finally get into it, consolidate for 5 minutes, pop up, and we're holding above it. We finally get the test here. Once I saw this come back up out of it, I would buy right here. Okay, so I'd be buying around, let's say $6 and let's say 675 or 670, right? And then play it up to this zone, right? So 670 to 950, let's say. You could say 970. I mean, that's, again, that's a 50% move. It's 50, from 650 to 950 literally is just under a 50% move. So lots of money to be made here on these contracts. It's helpful that Tesla was moving around that day. But the beauty with these options is that you don't need Tesla to move as much, right? We don't need big moves to make. You just got to find the contracts that have nice price action. So, get used to looking at the contracts, look at the open interest, look at your deltas. You're definitely look at your implied volatility. Try to stay away from, implied volatility that's crazy high, and then throw it on, copy it to your chart, and then see what the chart looks like, right? I mean, even if you look at this in the 1 hour. Let's do that, right? Just this here. There's some pretty obvious levels here. We have an hourly demand here, right? Unfortunately for Tesla, it continued to go up, but you see how it settled down here, right? You have demand here. That's obvious. We got a retest of it right here, and you could have played that up to this upside here. So, you could do it on the hourly. Like I said, I prefer the 5-minute, and that's pretty much all, folks. I'll do more of these in the future, but I want to keep this short. I'm already 16 minutes in. I can't seem to make a short video for the life of me. But yeah, you guys like, share, subscribe, comment, whatever that spiel is. I would like to hear your comments, your feedback. I've gotten some good feedback. A lot of people, handful of people want to see how we do entries. We talk about it a lot on the spaces, but I know a visual would be extremely helpful. So that's going to be one of the videos I'm going to come out with next. I am going to continue with, building the regular zones. I'll do more with the supply and demand zones. Probably on a lot of different things. And especially as the quality of the videos get better, as my ability to narrate the videos, or do it live like we're doing right now, and also the editing quality. I think it'll all come together here over the next month or two. We should start seeing some real improvements. So, anyways, guys, I'm gonna leave it at that. Again, please like, share, subscribe, leave a comment below, leave your suggestions. Come into the space. We're live on Twitter. Every day. It's at Traders Retreat. I do it with our buddies Sig and Dave, along with a decent sized group of speakers that show up every day, and they're awesome. Anybody is welcome to come up and speak, ask questions, whatever, right? We're pretty chill. We focus on keeping our money, and taking, the highest probability trades that we see. And sometimes we don't trade because, the market just doesn't give us what we want. So, it's I think we're unique in that sense, and people are liking it. So you guys appreciate it. Take care. Watch out for CPI. I'm gonna try to get this out before CPI comes out. So good luck with everything. I'll see you in the space.